Hi, Jonathan York, Bay Financial Partners, looking at investment markets. Pretty interesting week for US equities this week. You've got the Fed meeting. You also got a lot of the big techs reporting as well. You've got Tesla, Microsoft, and Meta all reporting this week. Now, the Fed will certainly be interesting because, given the current data, you're looking at a GDP number of around sort of 3%. You've got falling inflation. The latest jobs data was pretty good, around 256,000 jobs created. The Fed doesn't have to cut interest rates again to stimulate the economy. It's pushing on at a pretty good rate. Now, that's obviously in direct sort of contrast to President Trump, who is sort of demanding lower rates and really feels the world should be following suit as well and calling for lower rates from the central banks around the world. Which is quite ironic because potentially he doesn't really get the fact that the central banks are independent and are there to adjust policy for the good of the country and the GDP rather than on his beck and call. Indeed, it looks like the Fed now, potentially is only looking at 2 interest rate cuts this year and potentially one more in 2026. Now, if that is the case, and Trump does really sort of want lower interest rates, it only seems a matter of time before he tries to interfere with the independence of the central bank. Now, certainly rates have come back a little bit. 10-year is 4.55 and the 2-year is 4.26. But really, the main concern for the Fed at present is, potentially Trump's new policies going forward do have some inflationary implications. Potentially in the US as well is around $8 trillion sitting on the sidelines in cash. Now, obviously, with interest rates falling, that will start to look for a new home. Still no further development on the potential ceasefire or stopping of the war between Ukraine and Russia. Again, if you remember, President Trump said he'd get that sort of sorted within the first day of taking office. Now, what's quite interesting, the address that President Trump gave to the Economic Forum in Davos, really sort of just sitting there and sort of demanding what he wants from the world. One, telling the central banks they should be cutting interest rates, and also as well telling Saudi to get the price of oil down. Which again, there is a certain amount of irony there, because if someone was to tell him how to run the US, it would be a totally different story. Now, I sort of mentioned a big week for earnings this week. You've got Microsoft, Meta, and Tesla all reporting earnings this week. Now, oil has come back just a little bit, around sort of 72.50 and change. Now, in the UK, a little bit of positive news out there. The latest PMIs, which is slightly positive. There's nothing too sort of major, sort of plus 0.1, plus 0.2 on the numbers. But again, a little bit of encouraging news out there, considering it has been a little bit negative over the last sort of couple of months. Now, the EU region, despite sort of President Trump's sort of threats of tariffs, etc., towards the EU companies, the ECB is expected to kick off 2025 with an interest rate cut. Now, in Australia, better than expected inflation data really points the way now to a potential first cut from the Reserve Bank of Australia as well. They'll probably only expect 25 basis point cut. But again, remember that the RBA didn't hike rates anywhere near as aggressively as the other central banks. And that will certainly give the economy a bit of a boost. Now here in New Zealand, the latest inflation data was sort of pretty much as expected, around sort of 2.2%. Net migrations are still positive, but at a much reduced level. But also as well, a little bit of good news on the jobs front as well. For the last sort of couple of months, there has been a little bit of an uptick out there in sort of jobs created. Now, obviously, if we head into February, most analysts are expecting the Reserve Bank to cut interest rates by another 50 basis points at their meeting on February the 19th. Indeed, there is even some call for a 75 basis point cut. But if we do see 50 in February, then potentially we see another 50 in April as well. So the OCR at 425 currently, we take it down to 375 and then sort of 325 by sort of April. There is even some talk that potentially it could go below 3%. Now, so far the summer spending has been pretty good, and we just hope that's going to continue out there for the next sort of couple of months. So if you are looking for income options, go to the website www.bayfinancialpartners.co.nz for lots of interesting articles. I'm looking forward to speaking to you soon.